Welcome to Echo 311, Study Session 6, Errors in Accounting and Suspense Account. Introduction. It is a common experience for bookkeepers and accountants to commit errors in the process of recording and analyzing items of transactions using double entries. When this is discovered, the next line of action is to correct such errors. Those errors that could not be identified presently will be held in the suspense account pending the time they will be discovered and corrected. Learning outcomes. When you have studied this session, you should be able to 1. Define error in accounting. 2. Explain 2 categories of errors in accounting. 3. Outline and explain errors that do not affect trial balance. 4. Identify and correct errors that do not affect trial balance using journal entries. 5. Define suspense account. 6. Outline and explain errors that do not affect trial balance. And 7. Identify and correct errors that affect trial balance using journal entries. What is error in accounting? Error is regarded as unintentional mistakes in financial information committed by account officers or bookkeeper. Examples of errors include 1. Mathematical mistakes involving addition and subtraction. 2. Clerical mistakes in posting items of transactions. 3. Oversight or misinterpretation of facts. 4. Misapplication of accounting policies, etc. Note that fraud is different from error. Fraud is regarded as an intentional misrepresentation of financial information by an individual. Examples are falsification of records, alteration of records, misappropriation of assets. Classes of errors in accounting. There are 2 classes of errors in accounting, and they are 1. Errors that do not affect trial balance. 2. Errors that affect trial balance. Errors that do not affect trial balance. These are errors when committed will not stop the total debit and credit columns of the trial balance from balancing. Trial balance is prepared to test the arithmetic accuracy of double entry system in the preparation of ledgers and accounts. Trial balance is prepared to test the arithmetic accuracy of double entry system in the preparation of ledgers and accounts. When both debit and credit columns of the trial balance agree, such agreement is not necessarily a proof of accuracy of the bookkeeping entries because of these errors that are not revealed by the trial balance. Errors that do not affect trial balance are often committed in both ledgers and accounts where the double entry was carried out. These types of errors often affect 2 accounts, and their correction will be carried out as well in the 2 accounts affected. There are basically 6 types of errors that do not affect trial balance. These are errors of omission. These are types of errors committed when a transaction is completely omitted from the books due to oversight, e.g., sales of goods on credit to Bolu was not recorded in the sales account and Bolu's account. Errors of original entries. These errors are committed when incorrect figures of transactions are entered in a source document or books of original entries. For instance, Cash received from Williams, 520, was treated in the books as 502. Errors of commission. These are types of errors that occur when a transaction is entered in a wrong personal account of the same class. These types of errors have to do with personal account, e.g., cash paid to A. Bailey 20,000 naira was entered in B. Bailey account. Errors of principle. These occur when an item is entered in the wrong class of account involving in personal account, e.g., motor van expenses of 100 naira was debited to motor van account. Compensation errors. These are errors committed in which two figures of the same amount put in opposite side of two accounts cancel out each other, e.g., sales account was undercast by 500 naira, likewise the motor van account. Complete reversal of entries. These errors occur when an item of transaction is completely recorded in other way round in both ledgers or account involved, e.g., cash sales of 200 naira was debited to sales account and credited to cash book. To correct these types of errors, the figure involved will be multiplied by 2. Correction of errors that do not affect trial balance. The following steps are involved in correcting these types of errors. 1. Identify the type of error involved in the transaction. 2. Identify the two accounts affected by the error. 3. Open the two accounts or ledgers affected by correct the error. 4. Use journal entries to correct the error. What is suspense account? This is defined as a temporary account for recording errors that affect trial balance, pending the time these errors will be discovered and corrected. Suspense account is a temporary account because as errors are discovered and corrected, suspense account will Suspense account is a temporary account because as errors are discovered and corrected, suspense account will cease to exist. Only errors that affect trial balance will pass through suspense account for their correction. When debit column of trial balance is more than the credit column, the difference will be taken to suspense account as credit entry and vice versa. Importance of suspense account. It is used for recording and keeping errors that affect the trial balance pending the time they will be discovered. It is used for correcting errors that always affect trial balance. It is used for recording transactions which the bookkeeper is not certain of the appropriate ledger account to which such transactions should be posted. It helps to ensure the preparation of final accounts without delay due to errors that do not make the trial balance to agree. Errors that affect trial balance. These are types of errors when committed will not allow the total debit column and the credit column of the trial balance to agree. These types of errors are usually committed in only one account, which will make either the debit or the credit column of the trial balance to be more than or less than the other. These types of errors will always pass through suspense account before they could be corrected. Types of errors that affect trial balance. A. Single ledger errors. These are errors committed in which an item of transaction is recorded once in a particular account without a corresponding entry in another account. E.g., credit sales to Mr. Stone 2,500 was recorded only in the sales account. B. Partial reversal of entry. This is an error committed in which a transaction is mistakenly recorded in a particular account in the wrong side. E.g., cash paid to XYZ Limited was wrongly recorded on the credit side of XYZ Limited account instead of debit side. To correct this type of error, the figures involved will be multiplied by 2. C. Transposition error. These are types of errors committed in which figures of an item of transaction are transposed in a particular account or ledger. E.g., rent paid with cash 117 naira was recorded in the rent account as 171 naira. These types of error will lead to overcast or undercast of figure. Summary. From this session, you have learned the meaning of error and why error is different from fraud. You have also learned the 2 types of errors we have in accounting. You have also learned how these errors will be identified and corrected. You learn that errors that affect the agreement of the trial balance will be corrected by passing through the suspense account. This is the end of study session 6. Thanks for listening.